Hi, this is Mark from forex-fxtrader.com. Welcome back to my daily video. Moral of yesterday's story was from the analysis I gave you is how can a winning trade not be a winning trade? Let me explain. Yesterday I was showing you on the New Zealand dollar on the daily chart that I had entered here for the reasons I explained, and I was looking for a target down here of 67.6776. Similarly, on the CAD, I explained with the CAD how I had entered, and I also explained that you could look for a pullback for yourselves on the demo account, of course, back up to the 10800 area, because here, this was the candle close last night. The candle closed at 7694. I was in from slightly further up, I can't remember now, and I'd set a target down here of 6554. Now, I explained before that I normally trade off 4-hour charts, and my method for trading is I take two lots. The first lot I will close out at a small to medium-sized profit, normally minimum 30 pips. When markets are good, 40 to 50 pips. Once the first lot has got into profit, I then move the stop on the second lot to break even, to try to catch the big moves. So where did I go wrong yesterday? Well, the CAD, had I traded as my normal 4-hour trade, I would have made a potential 85 pips profit today on the CAD. As it is, because I was experimenting with this new daily thing, it would have lost. And the reason is, if we have a look here, what I was looking on the CAD was to come down to this target area here. However, just of late, most of the markets have been going sideways, and we've not been getting such big movements. For example, yesterday's move in the day was very small, and it was a doji spinning top candle. So, what I should have done is gone to the 4-hour, which is where I normally am. And on the 4-hour, it was glaringly obvious that where the first target should have been here, in this area. Price had come down, touched twice, moved away. Lo and behold, today it came down, it touched, it actually pierced it, went away. At that point, we would have been 70 odd pips in profit. But because we're trying this daily experiment, I let it run. My mistake. The moral of the story at the moment is, even if you're trading off the daily charts, is to only aim for a smaller first target. And the reason is, let me show you going back to earlier in the year on the Great British Pound, on cable. And what was happening on cable, when the markets were trending, it was easy. This was so simple. If you look here, from mid-March, 11th of March, the price of cable was roughly 3600. Cable then, until the beginning of June, went up in a straight line for 3,000 pips. Had you been in this trade from here and stayed in till here, you would have made $30,000 at $10 a pip in 3 months on a straightforward trade. And had we got in here and taken the profit off early off the first lot and simply let it run, we would have had phenomenal profit. The problem at the moment is, if you now look at where cable has been since June, with the summer markets, we've had the occasional breakouts, but it's roughly been constrained between 6600 and 6300. It's coming down, it's touched, bounced, it's gone up, touched, bounced. Now, it did break here. I think this was a news-related issue, can't remember. But in general, we're not getting the movement. So what we have to do at the moment with the daily trade mentality, we have to adjust our targets. Similarly, for the New Zealand dollar yesterday, I showed you on the New Zealand dollar that I had entered the trade. These figures here, actually, I've re-entered this trade. But yesterday, I'd got into the New Zealand dollar at 68.74 area, and I'd said that the daily target was down here at 67.63. Bearing in mind what I've just explained about the daily target and how little movement there has been of late, had I gone down to the 4-hour and had a look, it was glaringly obvious that the target area should have been either here or here at most. On that basis, had I done my usual routine of taking off the first profit at a smaller profit area, there is there a 60 pip gain. As it was, price came back out, I'd moved my stop to entry and it took me out. Now, what I have done with this trade, I have re-entered this trade. And if you remember, I explained on the first day, with daily trades, you have to be patient and you have to accept the fact that sometimes you will not make a profit, and you come back and you have to re-enter, etc., etc. So, I told you yesterday to look out for price coming back up to this area, and lo and behold, price came back and touched again. It spiked, but still closed below this resistance line. Now, at this point, you move on to smaller charts. And if you look on, say, the 15, let's look on the hour chart first. The hour chart here, we have it where this was from yesterday. Today, price came up, it touched. We have a spinning top candle of indecision, so we've got the classic rounded shape at the top. We move away. I took the trade here at 68.71. My stop is at 69.10. So we're looking in the region of a 40 pip stop, again, for a potential where we normally trade in the daily for way down here. But what I'm going to do with this trade is, once it gets down to a little bit further, perhaps really I ought to take my first profit now. A 30 pip profit, not really what day charts are about, but there are positive things to look at here. We've had a 5-8 cross on the 4-hour chart. It's nearing, no, it's not on this pair. We have a 5-8 hour cross here. There is a possibility for this trade to go further. What I would do now would probably take the first lot off here, move this stop to entry, and leave the trade to run again. We've made some profit, we've banked some profit and some money, but we still have a chance of a bigger move. Next move down from here would probably be in the region of here, 6,800. So another potential 30 pips, but again, we could set a trailing stop, simply follow it down. What's likely to happen, looking at this over the last 2 weeks, or the last few days, is it's likely to go up, down, up, down, up, down. So a day trader can be making money from the smaller time frames, simply selling at the top, buying at the bottom.